Welcome back to this video. In this video, we're gonna go through live demo of component method of depreciation. This is one of the most complex method of depreciation, and under IFRS 16, we need to follow component method of depreciation as we will learn in the theory part of this video series about component method, that you need to apply different rates and to different kind of assets in a composite asset model. In this particular example, we're going to walk through how Depreciation Lab handles component method of depreciation, and we're going to take asset of a aircraft. Here I'm already logged into the Depreciation Lab with the business tier account, and also you can have this particular component method of depreciation with professional tier account as well. So once you logged in, you can go to the left side here to specialized method, and you will have this input form. I already have one asset added here, which I'll try to delete it, and it's gone now. And now we're going to start afresh. So since this is a complex method and there are a lot of data, I have created dummy data to enter here for an aircraft, and how different components of that aircraft will be configured here. Each component in this particular asset, which is aircraft, will have a different depreciation method. So let's start with that. So this is the asset we're going to configure inside Depreciation Lab for the component method. So let's start copy pasting data. So asset ID, asset name, which is Boeing 737-800 aircraft. Purchase date is April 2024, 1st April. And here we are not allowed to enter any value here for asset cost and salvage value, as the all component sum will be the asset cost for individual component, and the same way salvage value. And life also is not applicable. You can see the note here. You can pause the video and read the note. And here we're going to add 25 tax rate and 10% discount rate. This particular field is to dispose of entire asset, not individual component. So in this case, if we dispose of entire aircraft, and that even you need to book here. So in this particular example, we're not going to do that, but it's very simple. So once you understand this particular example, then you'll know you can easily do this as well. So let's start adding components. So we have two sections here: component allocation, which is a must, and component lifecycle events, which is optional. So you may have a scenario where you don't have any component lifecycle events at all. So in that case, you don't have to use this, but this is a must field. You need to enter details here. That is a component allocation. So let's start adding our first component value. So the first component is airframe and fuselage, and then we're going to add its cost, 22 million, useful life 25 years, and 2.2 million as a salvage value. And we're going to add, and the method of depreciation is SLN. So airframe is a structural backbone, so uniform wear and tear over a long life. Straight line is the IFRS preferred method for this particular component here in this example. Now we're going to add the second component, that is engines. So let me copy the text, the asset name, and enter the values. 14 million, and this is units of production, and for that we need to add units, which is 30,000 flight hours, and salvage value 1.4 million. And here now we need to add production log. The units of production method requires a mandatory consumption data, so we're going to add the log. So we're going to start with 2024, so April 2024, then gonna add 2025 data, 2026. So now we are done with configuring units of production and the units for the second component, that is engines. Now let's add the third component. So the logic behind engines UOP method is engine wears based on flight hours and not calendar time. UOP is the only honest way to depreciate when, and this exactly where the most software fails, where Depreciation Lab handles it very cleanly. Now let's add the third asset, Avionics, and the cost is $6 million. Life is 8, and 600,000 is the residual value or salvage value. Now we're going to follow DDB method, double declining balance method. And here the logic is avionics are essentially software and chips. They go obsolete very fast. DDB front loads the depreciation to match real world obsolescence. So that's the logic behind choosing double declining balance method for avionics and flight control system, this particular component in our aircraft asset. Now let's go and add fourth component, which is cabin interiors worth $5 million. Useful life 10, 500,000 salvage value, and it will be declining balance method. And interior gets most of the abuse in 1 year. Fresh cabin gets thrashed the fastest. DB reflects that accelerated early wear without being as aggressive as DDB. So this is the logic behind choosing DB method for this particular component in this asset class. Now let's go to the fifth and final component, which is landing gear. The cost is $3 million. Life 15, 300,000 is the salvage value, and we're gonna go with straight line method. It's a heavy structural steel with predictable overhaul cycle. So SLN is appropriate and auditor friendly method. So choosing or making a decision for landing gear, SLN is the best. So now we're gonna do some cross check. I would call it a sanity check. So 22 million, 14 million, 6 million, 5 million, 3 million is equal to 50 million. Same way salvage value, 2.2 million, 1.4 million, 0.6 million, 0.5 million, and 0.3 million, 5 million. So let's go and check. Here it is, as you can see, 50 million and 5 million asset cost salvage value respectively. So the component method is configured correctly. Now we're gonna go for more advanced scenario. Now we're gonna add component lifecycle events. So the first event is impairment for engines. So let's configure that. So we're gonna select impairment, and the date would be 15 September 2026. And we have to select the asset or component here, I should say. We have to select this properly. And since it's impairment, we need recoverable value. So that is. And then the second event. So the reason behind in this scenario is an airworthiness directive from FAA plus the launch of LEAP 1B engine on a newer 737 MAX aircraft crashes. Use CFM56 market. We assess impairment and recoverable value of 8.5 million. So this is how the real world scenario will turn out to be, and reason for this impairment for this component. Now let's add the second event, which is replacement. So replacement will have additional feeds. So we'll go through that. So the replacement happens for avionics flight control system. So let's select that. And what is the event date? So it's 1st January 2028. The sale proceeds is 400,000. Expenditure 50K. And we're gonna buy new avionics, and that name we need to put it here, and the method would be straight line as the original method for this particular component, and the cost is 8.5 million with salvage value of 850,000 with 10 years useful life. So here you can read the reason. Now let's add the third event, which is replacement again. So here we had replacement, or here also we're going to have replacement for cabin interior refurbishment. Happens on 1st July 2030, and we have to select the correct asset, which is this. Sale proceeds 150,000. 30,000 expenditure. And we need to enter this value correctly to track the changes. And it is DB method, declining balance method. Cost is 6.5 million, 500,000 is the salvage value, and 8 is the useful life. We can read here the reason: mid-life heavy check, a new livery, slimline seats, upgraded IFE, new galleys, old fixtures stripped and sold as a salvage. Now let's add event 4, which is impairment again, and that is for airframe and fuselage. So event date is October 2033, and we have selected the correct asset, and the impairment value, or I should say fair value, is $11 million. So here there could be a case where if you add this impairment value higher than the carrying value on that particular date for this particular asset, you won't have impairment loss. So we'll check that quickly at the end of the video. to come back and see if I add more value or fair value, there would be no impact of this particular event on the depreciation schedule. This is how it works in real life as well. If the fair value is higher than the carrying value of that asset on the impairment date, it has no impact, and usually people do impairment to assess the correct value of their asset and check with their carrying value or book value. Now let's add event 5, which is disposal, and here we are disposing landing gear assembly. So let's choose that, and event date is 15 June 2035. Sale proceeds is 600,000. So the reason behind this particular event, and which is very nuanced, landing gear replaced under MRO contract with swap unit. Original gear sold to a parts manufacturer. Classic aviation circular economy. So that's why there is no other event for this landing gear end of MRO cycle. So now our asset is fully configured. As you could see, it is a lot of work to be honest, but it is required to calculate the component depreciation accurately with Depreciation Lab. And any other kind of fancy ERP you might having or sophisticated ERP you might be having, this would require same efforts. You might have a facility to upload a template, which I'll be bringing soon in this Depreciation Lab in the bulk upload section. So you can save it and run the calculation. And you can see we have two schedules, annual and monthly, as you can see here, and you will see each component's details separately. So here in this case of airframe and fuselage, we have a impairment event, as you can see, and there is an impairment loss. Same way here we have disposal and purchase, that is replacement. This is called replacement. Here also replacement for cabin interior. And landing gear assembly, we have a disposal. And you can see total asset details here. So we have impairment of 5.7 million. We had improvement of 15 million, and this was the original cost. Current year depreciation is 3.8 million, which is based on your account setting. As we have learned in the earlier videos, you need to set up your current financial year. So here in this case, it is January to December. So that particular value is here, current year's depreciation. Total depreciation at end of the asset and net book value and tax shield, and the status is partially replaced. So we're gonna download the annual CSV and we'll check. As you can see, it is a quite comprehensive report or CSV report for your entire components for this particular entire asset and various components. We had 5 components, so all the details are here, including the component instance, which would mean that when asset was replaced, the new component came. That also you can track. Closing value, tax shield, and verify it. Now let's see the monthly schedule, which is more interesting. It covers more data points and useful for accountants to do journal entry for component method of depreciation. So we go here and download month. So the lines would be more because this is a monthly granular data. And it has a column for methods as well for each component. A full schedule ready for any further analysis inside Power Query or Power BI, however we want it. And the file is CSVs. There is no extra overhead for your ETL process. Now let's go back to the app and see the dashboard. So if I go to asset register, you will see all the manually inputted assets. So in this particular section, whatever you input, and you have a capacity to input up to 150 assets. If you have a professional tier subscription or a business tier, you can add up to 150 assets. So maximum number of asset here you would see is 150, but here we have configured only few assets currently, and you can see here, this is our component asset, and you can directly go and edit it from the asset register. It will go to the respective asset section and to the respective asset. If you have many assets, you can always search here with the ID, block, or name. So suppose you had 50 assets and you want to scroll it down, you could always search this asset's name, ID, or block for all these 3 sections for manually entered assets. So this was the full walkthrough of component method, specialized method in Depreciation Lab. It is quite complex method. If you have to deal with this component method, I would request you to try professional tier or you can try the 14 days business plan. Inside that, you're going to get component method depreciation access, enter your real life assets, and see the results and give me feedback. Thank you so much for watching. I will see you in the next video where we're going to start with bulk section, and I'll walk you through entire bulk section as well, which is standard method, MACRS method, US tax, WDV method, India tax, and activity based, that is UOP.